Good evening, everybody. It's John Seville from Acorn Wealth here, and this is your special executive summary for options during earnings season. Now, what makes this an extra special day is that we're, of course, heading into the 1st of May, which is open range, which will tell us a lot about where the market's going to go for the next few weeks of May until options expiration on May 15th. So, let's have a look at the S&P 500. If we're to remove all of this noise and just simply look at the bare bones, what we can see is that the S&P 500 is basically broken out of what was previously a kind of sideways trending pattern. We had a triple top, we broke out and really went nowhere and have pulled back. So what kind of pattern could we be having? This could be a head and shoulders, which means we have a left shoulder here, a head, and then this possible support point which will either rally up or will break through. Now if we rally up, this will be ideal because this will take some of these very much under pressure equities back up to some previous support levels where we'll get better entry points for short. So that's what I'm really hoping for, is that tomorrow we kind of rally up to 2100 and then Monday we get like an intraday high of somewhere up towards 2110 and then straight down from there. But either way, whether we get that dead cat bounce or whether we break down right away, I'm looking for a target of 2040 on the S&P 500. So, looking at possible earnings plays, I've been searching for some, using our proprietary scans, looking for the types of earnings plays that might reap some big rewards. Now, of course, two of the recent stocks that came up in that scan, for those of you who are already following along, Twitter was one of the ones. Of course, we can see with Twitter, price was going up, but the money flow, the smart money, significantly selling right up until the final bell before it plummeted. That was very predictable. It wasn't a huge surprise, although I'm sure many people got burned. So Twitter, one of the things. LinkedIn, of course, one of the other ones, not showing up in the chart, but that's gapped down to under $200, down 25%. But look at the same thing. Price going sideways, money flowing straight out of it. So we have a scan that finds these things, of course. And so here's some of the ones that we're looking at currently. BKD, Brookdale Senior Living. Now these report on March 5th. And we've got insider selling and institutional selling on this one. Now, of course, I don't play these with holding the stock. I never hold stock during earnings, only options so that you can control the risk. And full disclosure, obviously, trading options is very risky and you can lose everything that you invest. So I only invest into these options what I'm willing to lose all of. So which is typically no more than 2% of the capital I'm trading with. So anyway, how you manage your own risk and what you choose to trade is up to you. But here's one I'm looking at. And I'm looking at the $37.50 May 15 puts, which are currently priced at 85 cents. And this could be quite exciting because the money flow, of course, is dropping sharply out of this. And if we look at the trend line, you can see we've already broken down there, rallied up, tested that resistance line, and have pulled back. So this is looking good and coinciding with insider selling. NUS is another one which we've already been following. We already picked this as one of the short favorites. I think it was at $60 when it started to drop. And then our entry criteria was breaking this little consolidation triangle here, which it did today. And the volume jumped from 516,000 to 910,000, so almost doubling as it broke that trend line. So you've kind of got a bearish flag almost, and also got some interesting activity on the money flow, sharply divergent, much lower lows than when we were previously at much lower prices. And the $54.50 May 8th puts are $1.09 currently. And these guys report on May 4th. Let's go to the next one. HCA. Now, this is really interesting. This is a healthcare stock. And I was reading on a blog earlier this evening that currently 520 stocks listed on the NASDAQ were up at least 30% year to date. And of these 30% gainers, 107 are down at least 10% this week. And out of these losers, out of these 107 losers, 75 of them belong to the healthcare sector. And 52 of those 75 are biotechs. So I thought that was quite interesting. So when we start to look at healthcare and biotech stocks, we're seeing some of these high flyers, or tall poppies as we call them in Australia, being knocked off. HCA is in the healthcare sector, and this is why I made one of my selections, as well as some of the others you'll see. These guys report May 5th before market. Heavy insider selling, heavy institutional selling, and the $73 May 8th puts are currently 85 cents. So again, if the market is in a head and shoulders and we get a rally up, this stock also seems to be in a head and shoulders, and that could give it a good opportunity to kind of rally back up into this resistance zone around 77, giving a better entry point. But if it just keeps breaking and the market does too, still looking at those $73 puts. INSM is next. May 7th they report before market. And basically these guys also biotech. They've got massive twigs money flow divergence. This has already dropped sharply, so that's obviously the concern here. But this could just be a falling knife that's going to cut through all resistance, or support rather. The two contracts I'm looking here is the May 15th $20 puts at 95 cents and the May $19 puts at 35 cents. And of course, any kind of dead cat bounce or rally tomorrow in the market would obviously help this. If we look at the resistance, you can see that a rally back up around to this $21 area or around it would be a better entry point, give us an extra 5% on the stock, which would bring those option prices down hopefully quite considerably. And last but not least, CVC. Next week, May 4th, before market open on Monday. 25% short float, insider selling. And looking at the May 15 expiration $20 puts, currently 75 cents. Now, the one warning here is that this one, unlike the other ones, does not have the same kind of divergence in the money flow. But what we do have is a very sharp rally into smart money resistance. You can see the kind of reaction we've had at this price before. So we're dealing with an oscillating pattern that could bear some looking at. And here's the insider selling I'm talking about. You can see a very strong presence of insider selling kind of across the board since since August. So that's something that we're looking at. And then the institutional transactions, you can see some buying, but also some selling recently. So this is probably one of the weaker ones of the bunch, but something that I'm still watching quite closely. And they're a May 4th before market open. Now this is just a very small sample of the plays that we've got going on for also May 4th and Tuesday before market as well for next week. So if you like the looks of these, then absolutely take advantage of our options during earnings course. It's $297, but we are offering it as a special promotion month end for April for $97. And all you need to do is go to acornwealthcorp.com/earnings, and you can sign up right there. It'll give you full access to our 2-hour earnings workshop, as well as the video reports for a full week on what we're looking to trade between now and the end of next week. So huge value. I'm sure you'll get a lot of value out of it. And for those of you looking to who don't like to play the options, well, there's a lot of opportunities for stocks as well. And here's 3 that I'll give you. EXEL. These guys have already reported earnings, and in the pharmaceutical space. Now it's a very low price stock, but they trade plenty of volume. 5 million shares almost today or yesterday, and 2.65 million the day before. So plenty of money going through the stock. And what we've seen in the market is, even with strong earnings, companies are just tanking, and you can see the smart money just flooding out of this stock. So this could be a sharp drop tomorrow as we go through this kind of 250 area. We could simply drop all the way down to the $2 area. So we could be looking at about basically a 20% drop potential on EXEL, or at least a good short-term day trade. The other stock that I'll show you is GERN. And this one also reported earnings today, but despite positive earnings, again, you can see the money flow flowing right out of it. And again, low price stock, but still trading 3.69 million shares today, so almost 10 million bucks. So again, could be a potentially good day trade straight back down. And looking towards this area as to where it could kind of get to. So we're looking from about 362 down to 320, so about 40 cents, so a 10% potential day trade. So whether you like to trade options or just the stock, this is the kind of course that will show you how to identify these types of plays. So again, acornwealthcorp.com/earnings. The course is normally $297. It is reduced to $97 and will be open until midnight Saturday. And it will then go back to the normal price. We are launching this next week, so do take advantage of it, and hopefully you're able to help use this research to help your trades. With that, happy trading, and we'll see you next week.